If you keep overcomplicating market structure, drawing all kinds of levels, chalk, boss, MSS, syst, everything, and at the end of this you still get caught on the wrong side of the market, then this video is for you. I've spent the last 6 years studying and refining market structure, and today I'm going to show you a simplified way of reading market structure so it finally becomes usable. I'm going to give you the 3 secrets that I use in order to simplify market structure, and you will also see me applying this live on the charts. There is one reason as to why many traders get caught on the wrong side of the market. What I'm showing you here is the sentiment on Aussie CAD. This means that most traders are bearish while a minority of traders are bullish. So if I show you this, you would expect me to now show you a very bearish market. But in reality, the market is moving extremely bullish. The 1 hour market structure is incredibly bullish. And the reason why this happens is because we tend to be contrarians in the market and we think there's no way this is moving higher, and if I catch the top then I'm gonna get rich. How many of you have probably already felt this? And this leads to tremendous losing streaks. So here's the first very important lesson. When the 4 hour market structure is bullish, do not enter in shorts. And when the 4 hour market structure is bearish, do not enter in longs. Because market structure is like a river. A river is moving downstream. And when we are trying to short this specific market, it's like we are trying to swim upstream. But here's the key, no matter how good of a swimmer you are, you will not be able to fight this current. So the best thing is to swim with the current and swim to somewhere safe. Yet a lot of traders' charts, they look something like this, where the 1 hour market structure is incredibly bullish and they keep trying to short. Or like this, where the market structure is already proven itself bearish and we're just trying to find that one reversal that finally is going to be the low to give us a very high risk reward trade, and we end up losing again. But here's the problem. Everyone knows that an uptrend is simply a higher high and a higher low, and a downtrend is a lower high and a lower low. What they don't know is how to consistently apply it. What is market structure really for? What time frames should I apply this in? And why is one time frame bullish while the other one is bearish? And don't worry, because by secret number 3 you will have an answer to all of these questions. But first, let me show you how to actually simplify market structure so that secret number 3 actually becomes useful. There's a couple of things that we need to understand in order to simplify our journey into becoming a profitable trader. And one of them is that market structure is the main indicator of the direction that the market is in. And yes, market structure tells us the direction, but we need to identify the market structure within a higher time frame, else it is constantly going to be disrespected. And once we define the higher time frame, we only trade in line with that market structure. And we do not enter in counter market structure trades, which we will talk about very soon. Now, which time frames are we going to be doing this in? We're going to be doing this on the 4 hour and on the 1 hour. This is where we are going to be reading the most effective market structure. And here is a very quick example. You can see that on the 1 minute chart, and you can see that the market moved bullish, it moved bearish, it moved bullish, it moved bearish, it moved bullish, bearish, bullish. So we have multiple types of market structure and multiple types of market structure shifts. And these are very hard to read. Why? Because we are on a very low time frame. While on the 1 hour on Nasdaq, you can see that we didn't have, over the course of 7 days, any shift in market structure. It was bullish. So what do you think it's easier to read market structure in? Is it on the 1 hour, where within 6 hours this is going to completely change multiple times, or the 1 hour where it takes several days in order to finally change the market structure? Reading the direction of the market is going to be easier if you identify market structure within the 1 hour and the 4 hour. And here's the last bit of wisdom that I found out the hard way. The lower the time frame, the more the market structure will be disrespected. And how do I know this? Well, there was a time in which I was trading euro dollar on the 5-second chart. And you can see this is a trade that I personally journaled, and I took a loss within just 5 seconds because I thought, okay, we reached a key level, we have a very strong market structure shift, there's an order block right here, I entered and within 5 seconds I had taken a full loss. Because here's the thing, time frames aren't enough. Market structure shifts happen everywhere, but we still get lost. And that's why a lot of traders stay on the wrong side of the market. And this is where secret number 2 is going to come in. And this is what I call the big flip secret. And what it is that a lot of traders get caught on the wrong side of the market because they don't know this one thing. A market shift, a shift in phases, is only valid when we shift from a key level. And here's an example on the 4-hour chart. You can see we have a very strong market structure shift, very bullish candle that disrespects the body of the bearish candles, creating a market structure shift. Yet there is no follow through and the market ends up moving bearish. And where to? Towards a very crucial order block on this bullish move. And this is where we had the strong follow through after we hit the key level. And I learned this the very hard way. Because the truth is, I used to be the type of trader that didn't understand market structure. I would see a bearish move and I would believe that no, maybe this is the time that we move to the upside. I would look at this daily chart and I would think there's no way it can move lower. And you can see that I was complicating my life with all the boss and chalk and liquidity and everything, and I didn't need to. By simply understanding market structure, I would always be able to avoid this sort of entries that continuously resulted in loss after loss. And one of my students, Bobby, received an $8,000 payout, and Bibi said, just out of curiosity, what was the missing piece of the puzzle? To which he said, the missing piece of the puzzle was bias. If you are bullish and price is going bearish, I was not taking any trades. I was waiting for price to become bullish so I can trade again, which is clearly what I was not doing and was keeping me unprofitable. So if you want to identify a very strong market structure shift, do it on the 4-hour and do it on the 1-hour and verify what key level the market is reacting from. This is how you identify high probability market structure shifts. And now that you know the fundamentals, the time frames in which you are applying this in, and where the high probability market structure shifts happen, the missing piece is how to execute with that knowledge. So let's get into that right now, and I'm also going to be showing you how to apply this and execute on the charts. So you can apply this for yourself and you don't have to struggle again. So here's how to find the easiest setups using market structure. Here's the thing. Market structure is like a dance. The easiest entries will come when they are in sync. Because here's the truth. Sometimes the 4-hour is bullish, but the 1-hour is going to be bearish. And what does that mean? What time frames did I mention that you should focus on? The 4-hour and the 1-hour. And the easiest trades will come with the market structure of the 4-hour and the 1-hour are aligned. And this is why trading is a game of 90% waiting and 10% executing, if not less. And what that means is that if we quickly look at these examples, we can see exactly where the easy trading is going to come in. The easy trading doesn't come when the 4-hour is forming higher highs and higher lows, while the 1-hour is forming lower highs and lower lows. The easy trading will come when both of them are in sync, which means as soon as we see the 1-hour market structure forming a higher high, shifting bullish, while the 4-hour market structure is also forming a higher high, this is where the easy trading is going to happen. So our job is to look for trades as the market is moving bullish on both time frames and just wait when they are not in sync, when the 4-hour is bullish and the 1-hour is bearish. If you do this, you'll already see an amazing improvement not only on your market structure reading, but also on the ease of the trades that you're taking. So here's an example where we have 4-hour market structure on NASDAQ. We have the market structure flipping bullish right here, and I'll show you that this comes from a very strong key level, and then we just are moving bullish on the 4-hour. Never was the 4-hour lows disrespected. And you will see that the easy trading will come always after the 1-hour is also forming new lows, higher highs, new lows, higher highs, new lows, higher highs. Now, seeing the theory is one thing. Let's apply this on the charts, and I'm also going to be showing you how you could have executed on trades based on this. Because if I don't show you this on the charts, then it probably won't click. Now, here is the chart that I've shown you before. One of the things that you will notice is that we had a very strong market shift after we swept a massive low. So that means we are at a higher time frame key level, which makes this market structure shift very high probability. So now let me show you how we could have executed on this exact price action. The 4-hour market structure is still bullish. So now our job is to identify a high probability long and execute. And notice how right now the 1 hour is forming this lower low, which means that it's showing us bearishness. So what are we going to do? We are not going to be doing anything until the 1 hour shows us a strong market structure shift in which we will be able to enter with the stops protected by 3 key levels, because as we've seen, market structure is now aligned and we target a 1 to 2 risk to reward. So once again, we enter in a long because we know 4-hour market structure is in line with the 1-hour market structure and we target a 1 to 2 risk to reward. And as we're in, the market eventually goes to the final take profit. Now let's see what happens on the next day. The market continues moving higher and eventually we have a range, which is completely fine. Now what happens on the next day? The 4-hour is still bullish. We can see that the 4-hour continues reacting from bullish key levels. And this is where we're going to wait for 9:30 a.m. Eastern Standard Time. We're going to wait for the market to move lower. And then from here, we want to see now the market showing us the bullishness so we can finally execute. And now that we have the 1-hour bullish, the 4-hour bullish, and the 5-minute bullish, we are able to execute with the stops below the low and a target of a 1 to 2 risk to reward, while entering with the stops below the low and a take profit at a 1 to 2 risk to reward. And this not only gives us a very strong understanding of market structure, but as you've seen, can also give you a lot of opportunities if you know how to execute on it. And this is the power of simplifying market structure into very clear steps, because if you understand the foundations, secret 1, secret 2, and secret 3, you will be able to consistently execute on trades as you go into the live charts. So what I recommend you now doing is going over your previous trades and seeing how this market structure was looking on the 4-hour and on the 1-hour, and then ask yourself, did you trade when both were in sync, and did you trade in line with the direction of the market structure? And you will also see this happening over and over again live. Now, if you want to ask me any questions, learn the entry models, have direct access to me, and be guaranteed to get funded in 90 days, then sign up to Fund the Trading Blueprint with the first link in the description. If you want to check out the best futures prop firm, then make sure to check out Funded Next and use code KT to apply the best discount code available. If you have anything else that you want me to simplify, let me know. I'll see you in the next one.